Welcome to your Mortgage Insider Update for December 22nd. Welcome to the holiday week. Safe travels. Be well out this holiday season as we bear ahead into the new year. Quick update on markets today. Relatively flat, not a lot of news, but a lot of news last week. So we're going to break that down, kind of show you where that lands us in the charts. A little bit higher to start the beginning of this week with the 10-year Treasury back above 4.16. It's been hovering around this level, much higher elevated levels than back at the end of November, but steady as it goes. Mortgage-backed securities are actually flat on the day. We'll take a look primarily at the 10-year Treasury as a barometer of the direction on the actual interest rates. So for today, we move just after squeezing in between the 100-day average and the Fibonacci retracement line at 50% last week, broke above to start this week off. Not a lot of new news coming into the Christmas holiday. Markets will be closed for Thursday, but in general, not a lot of new data points to come out until beginning of January. So let's talk about the data points that came out last week. So we did see a move lower on December 18th, and this was after the inflation reports. Consumer price index for November came back muted, quite a bit lower actually than what initially was anticipated at 2.7%, above the Fed's target rate of 2%, but a move much lower. The anticipated inflation rate was actually for it to go up to 3% from 2.9. Instead, it went down to 2.7, both on the headline and core inflation numbers. So in general, that's a really good win, but we can see not a lot of major movement down in the overall interest rate environment. It was trending down all week, as we also had the beginning of last week, the jobs reports, the belated jobs reports for both October and November. Both came in worse than expected. Friday, one of the last items that came out was the QCEW employment report update, basically showing that the total jobs from July of this year through the end of this year being adjusted is pretty significantly. About 1 million jobs were overstated in those jobs numbers. So the report that I just mentioned on Tuesday, we got employment reports that came out, but what we're finding is that those reports are being overridden basically well after the fact, where we're seeing a lot of lesser jobs created in the economy than anticipated. So why no movement on interest rates? Well, the Federal Reserve has left it pretty clear that they're going to wait a while. They haven't straight up said that they're going to hold off in January. So until we get a new jobs report for January and the next round of inflation, which we will get normal release dates for PCE inflation report later, at the end of this month, actually first in January for the month of November. PCE is a little delayed. That's the Fed's favorite measure of inflation when they actually make decisions. But we will also get December CPI report, producer price index. A lot of these things will happen in the middle of January, well ahead of the next Fed meeting at the end of January. The only news that could be on the way now is Trump could announce the next Fed chairman, and that could move markets pretty significantly. Just the anticipation of somebody that's going to be announced. They're going to go through Senate hearings and confirmation, so they won't take the role until May of next year. But that is pending, and that could come out any day. Could be the 1st of January, first week in January, or it could be sooner. So we'll keep an eye on that. Come at updates every single week here on this YouTube channel. So subscribe if you want to see weekly updates, and follow our newsletter when you can. Have a great one.